So welcome to this session of the Tactical Trading Room. My name is Mark Shawzin the Pattern Trader. I like to start each day with some kind of affirmation or trading thought. We looked at this one the other day, and this is the trading affirmation of the day. Limiting losses is by far the most important component of trading. Capital is the inventory of a trader. If you lose the inventory, the business is over. So sometimes, it really comes down to dialing down to the most simplest thoughts. So much of trading is in our mind. In fact, 95% of trading is in our minds. The market's going to do what it's going to do, and it's how we react to that. And so to me, capital conservation is, the key to everything. And I think, in the last 4 years, my trading results have kind of skyrocketed. And I really attribute that to being completely emotionless about taking losses. If something's not working, I just get out. I don't question it. I look at the trade. Now, here's another important trick. I never have my account open and I never look at my P&L because so much of the time we're equating trading to, money balances. We're watching money balances grow and we want to take it. Money balances are disappearing and we're fearful and we want to cut it off. And we're making decisions based on money balances. So I try and make decisions about the trade itself. What are the setups of the trade? What's the risk reward of the trade? Where are my parameters? And then either the trade is working within those parameters or it's not. If it's working, you grow it, add to it. If it's not, you just cut it off like a limb. So I don't know if you guys remember this movie called Moneyball. I think it was back in 2011 with Brad Pitt. And he plays, and it's a real life role, this manager of this baseball team, the Oakland A's. And as a young kid, he was drafted before going to college. So he had a career-making decision whether he should go to Stanford or accept a fancy offer from the Oakland A's and take a lot of money. And he went for the money. And then it turned out he wasn't as good as the scouts determined, and everything changed. And he vowed from that point on that he was never going to make a decision about the money. And that's really what trading should be. Trading should be really a very objective thing. You should be waiting for the best setup, sitting on your hands. Right now, it's a very up and down environment. There's a market where I think the S&P is going to go and print a new high. But then there's another part of me saying that very soon after it prints a new high, we're going to get a pretty good sell-off. So right now you're seeing, a subset of things happening. Microsoft skyrocketing, Amazon, Google. But on the same time, we've got, companies like Coinbase and Tesla cratering. So you've got this multi-theme market, which I can kind of feel in my body. It makes me feel kind of squishy, where, you're seeing somewhat off balance. And you should really listen to those instincts. Gavin DeBecker wrote a book about your instincts, that you should trust your instincts. They're the only thing that, is not trying to sell you something. It doesn't have a political agenda. Your instincts only have your best interests at heart. And typically, your instincts are such that you can't even quantify it. If your kid comes home from school and says, his new teacher is a creep, you probably can't take that teacher to court. But the probabilities is he's a creep. So we all have an instinct about something, and that's really the nuance. And it's the thing that you really can't account for, in trading. When I see a setup, it should just leap off the page and speak to me. And, so that's kind of the thought for the day.